All right, welcome back, everybody. CPI is due out tomorrow morning at 8:30. Ahead of that, we want to welcome former Dallas Fed President Richard Fisher. He's now senior advisor to Jefferies. He serves on the boards of Tenet Healthcare and Warner Brothers Discoveries. And, of course, he is a CNBC contributor. And Richard...
And have been for 20 years.
Yeah, we were just talking about this. It's been 20 years since your first Squawk Box appearance.
October 13th of 2004. And I was the host.
We love having you here.
Guest host. Don't guest host. Don't pad your resume.
Oh, I'm so desperate to do that.
Does it come to that? You're on the Fed, for God's sake. But your claim to fame, you are hosting Squawk Box.
Well, you know, that was a year before I went to the Fed.
Fed is better.
All right. I agree with you on that.
So if you were in the room next week making this decision, what would you do? Would you cut 25 basis points, 50 basis points, and why?
No, I would argue for 25. First of all, you don't want to send a signal of worry. The Fed doesn't worry about politics, but you know darn well if they did 50, one of the candidates, you know who I'm talking about, would be all over screaming about the Fed. And I don't think we are slowing down. There's no question about it. We still have positive economic growth. Inflation's coming under control, but we're not fully there yet. But it was pretty clear after Jackson Hole the change in direction that's taking place. So 25 basis points would be my argument.
And even with politics, I was trying to think about it. It's hard to imagine either candidate complaining about a rate cut right now. It's so
since
close
they've both
to the
been
election.
hammering the table to get one.
Saying that they want one.
Yeah.
I'm coming through
anyway,
on this.
Politics is
weird.
Trust me, they're indifferent to politics at the FOMC. I never heard it discussed in 10 years. So, I mean, the real issue right now, and I've talked about this a lot, and I'm always surprised at where things are trading, is how do we finance our deficits? The Treasury auctions have actually gone fairly well. We've been very lucky that we have so-called households, which are really foreign flows, pension funds, insurance companies, have been buying the 10-year and buying other debt. But our interest costs now are $2 billion a day.
Yeah.
And the other thing is they shifted to Treasury bills. This is at the Treasury. This is Secretary Yellen. And 22% of the refinancings are in Treasury bills. That's 5% money. So if the Fed does cut, that'll assuage that pressure a little bit. But it used to be 2% money.
Do you think that if the Fed cuts, that's going to be okay with all the buyers who have been showing up? They'll say, okay, we'll take less for what we've been floating you? Or you think there's a point where those
that are
buyers
holding
disappear?
5% paper will be very happy.
Yeah.
You're looking at one of them.
Yeah.
And I don't know anybody that I know, an investor that hasn't put money in the short term, 1 year or less, or 2 year or less. And those rates have come down. So the returns are pretty nice for totally risk-free paper.
Totally risk-free. The returns in the market have been pretty good, though, if you're looking at equities.
Yeah, that's been helpful. And so that's another reason I would argue for 25 basis points. We still have accommodative markets. We've had some shocks to the system. But if you look at all the ratios, the spreads, and so on, we're still pretty accommodative.
So you think the economy's in a decent point, too? Because we have a range of people who come on this show, some of who think, yeah,
well,
this is the
your previous
continued.
guest was talking about, recession obsession. And we've had this for years. And what I get a kick out of is we had the 2 to 10 was inverted. And everybody said that's the signal for...
Now it's uninverted.
Now it's positive.
I know.
So
That's when it's supposed to happen, though.
I know that. And that's historically what has happened. But still, I got a kick out of that negative argument saying we've been talking about recessions for 2 years.
Well, eventually we'll be right.
Yeah, eventually we'll be right.